Hey, good afternoon. It's Matt Green. Welcome to our Facebook Live event here on Real Insights Live. This is where we do a semi-monthly interview with successful real estate agents, talk about the market trends, and just kind of all things. Hey, good afternoon. It's Matt Green. Welcome to our Facebook. Sorry, a little background noise. It's April 27th, 2017, and today we are discussing the Utah County and Salt Lake County real estate markets. Coming up in about 2 weeks on May 11th, it's the Keller Williams Red Day. And if you're not familiar with Red Day, it's a really cool event that our company does where our 1,200 agents here in Utah, and I think it's 160,000 agents now worldwide, go out into the community, carve out the day from this normal real estate practice and give back to the community in some way. So service projects, each of our offices engage in just some kind of cool community give back. So that's May 11th. We'll do a little video to share with you guys some of the things that we're doing in Utah. We're excited about that. And then the following week, May 18th, I'll be joined with two really cool special guests, Jeremy Larkin and Karen Anderson, two great real estate agents down in St. George, to discuss the St. George Parade of Homes and kind of specifically the architectural trends and new design trends that they saw. So if you're an HGTV fan and love to check out what's going on and see those homes, this is going to be a great event. May 18th at noon, right here on our Keller Williams channel. So to make sure that you don't miss those events, make sure that you like our Facebook page, facebook.com/KW Utah. And certainly you can follow me at facebook.com/Matt Green Utah. If you're enjoying today's interview and like the content, I would love for you to show us a little love by clicking the like button, certainly the little hearts, all that kind of stuff. We love that feedback. And certainly post your questions or comments down below, and we will do our best to get to some of those questions before we wrap up today. So let's jump into it. I've got two really fantastic guests. Super excited to have them on the show with me today. Joe Pierson, who is just a rock star agent in our Draper Keller Williams office, and Jimmy Rex in our Orem office. Between the two of these guys, they sold 250 homes last year. So they know the real estate market at a very high level. Excited to have them on. Gentlemen, thank you and welcome to the call.
Thanks, Matt.
Good to be here.
So guys, I thought it'd be fun to start out with kind of that question that we get asked so frequently as a real estate agent, and that is, how's the market? What are you saying about that right now? How are you responding to that question?
I think it's a very unique market. And so the answer that I give to everybody that I'm talking to, you want to make sure that people understand that it is still a great time to be buying a home, and there's enough economic factors to determine that, but yet it's a great time to be selling a home. And so the answer that I give is I say, it's a very unique market. I've been in this market selling homes for 14 years, and this is the first time that I've seen a market where it's both a great buyers and sellers market. And then I kind of go into a little bit more detail with, if you're selling a home, you're going to get really good money. You're going to get top dollar more than we're at an all-time high for where houses are selling for. But if you're buying a house, you can still take advantage of the great rates, and every factor looks like we're just going to keep getting better. So it's a great time to lock in a low rate before they do eventually go up.
Yeah. Joe.
Yeah, I would say something very similar. So when I get asked that question, I usually tell people it's a fantastic market. I actually, just as Jimmy was saying, if you're a seller, you're at an all-time high as far as values go. And with the low inventories, it just creates that perfect environment for you to be able to really maximize your dollars on your house. And if you're a buyer, while that is a little bit of a struggle, the reverse, you're going to have a low inventory. The fact that you have such great rates still, and the economic outlook for our local market is fantastic. So I think either way, it's a great market to be in. There's definitely strategies involved in making sure that you're successful with it, but it's a great market.
Yeah. It's interesting when you think about just kind of the underlying economics in Utah and the Wasatch Front generally. It's such a strong, desirable market, and every economist that we hear from speaks so positively about the future growth of this area. So it's hard to see, that any kind of investment in the real estate market along the Wasatch Front over a long period is not going to do very, very well. So as you guys know, as agents, we generate a market report, and I thought it'd be great just to jump into this and kind of go slide by slide with some of the statistics And for those of us that geek out about this kind of stuff, it might be more fun than for others. But I think it helps us really start to communicate a good message and help our clients make good decisions. So why don't we jump into, and I will share my screen here, and we'll just jump into some of these market reports. And as we do, don't hesitate to jump in and just kind of share your thoughts as we go. I thought we'd start out with just comparing Salt Lake County and Utah County just a little bit. And so this is closed transactions. Now, these first three reports, I guess, are from the Utah Association of Realtors. And they run 30 to 45 days behind. So this data is only through February. And it's year-to-date closed transactions by county. So January and February, and it's comparing it to the same period of time back in 2016. And so you can see, kind of interestingly, Salt Lake County is down in number of closed transactions, closed sales, by 3.3%, while Utah County is up 4.7. And then just quick other kind of summary piece, and then we'll get into some of the more kind of generic or trend type data. New listings in Utah County, same time period, year to date, is actually up 9% in Utah County. So we've taken 9% more listings, while in Salt Lake County, we're down 13%. Are you guys seeing that and experiencing that, feeling that in the marketplace?
Yeah, I think one thing that, and Matt, if you want to address one of us specifically each time, we're just both looking at each other here like you and me first. But
Sure.
I think one of the things that I experienced last year in February and January is if you remember, we had really good weather, and it really spawned a lot of people going out and looking at homes. And I think it boosted our whole market at the beginning of the year. This year has been the opposite. It's been terrible weather, yet you see the numbers of actually still, at least in Utah County, and, they've gone up as far as the number of homes that have sold. Inventory wise, and I'm sure you're going to dive into that a lot more, but new listings, year to date, if you look at, Salt Lake and Utah County, it's a little different, but we're up 9%. I think that's just the optimism that people have for selling their homes. And they're seeing, so many people seeing that they're getting top dollar for their home. You talk to your neighbor and you find out what they sold for. I think that's what's driving people wanting to get their homes up.
Yeah. Joe, any thoughts?
Yeah. And in Salt Lake County, I kind of feel like, and I think a lot of this, the inventory levels are driven by the new construction, right? And I think new construction has been so very strong. I think Utah County may have a little bit of an advantage with, more room to expand and more building going on. But yeah, I think I'm experiencing that same thing. So.
Mm-hmm. Mm-hmm. Well, let's look at kind of the trend data. So this is Salt Lake County. The blue is active listings at any given point. So every month we're looking at the number of active listings on the market. You can see clear over here. Let me just highlight my cursor so you can see it just a little bit better. So over here, this is April of 2011, and we've got data by month all the way until April 2017. And the blue is the active listings that were currently on the market. The red is the pended. Now, I've been looking at this data for 20 years, and I've never seen a time like that we've seen in the last handful of years where the pended units, the units under contract in the marketplace, actually exceed the number of active listings. And that happened during the summer months of last year, and it looks like it's going to be happening again during the summer months of this year as we actually see those two cross. Now, if we look at, just so you can see, kind of get a sense for the number, that's about 2,800 units under contract, while there is just short of 2,000 units on the market available. In Utah County, very similar, maybe not quite as extreme, but also again, just short of 1,800 units under contract, the red representing the under contracts, blue representing the available inventory, about 1,500 units available or homes available. And the under contract is actually exceeding the available inventory. So, when that's the case, obviously we're seeing a lot of upward pressure on pricing. What other things how does that else impact the marketplace? Joe, why don't you go first?
Well, yeah, I mean, I think that upward pressure on the market, there's a couple of things. I mean, one thing that I've noticed with a lot of our sellers is they're really excited about the prospects of getting their home sold and getting top dollar, but they're also really nervous about jumping into, this inventory issue that we have. And so a lot of that is just kind of calming that fear and helping to strategize and put a good game plan together so that they can rest assured that, okay, I'm not just going to be high and dry when I get this house sold and have nothing to buy, right? Because I think, and that's what we're seeing with those levels. I keep pretty close track on that under contracts versus the actives as well. And that's exactly what we're seeing. It's just, that's such an issue that if we're not addressing that with our clients, it can be a big hurdle for them.
Yeah. Jimmy, do you have thoughts on that relative to, I think in many cases we have sellers that would like to sell, but they're fearful of not being able to find anything to buy.
Yeah, and we are running into that quite a bit. One of the things that I've experienced that I've done a couple of times in the last month or two is I'm telling my sellers, because they're like, they want to take advantage of the market. We don't know how long it stays this hot. And just like you said, their concern is, well, where do I go if I sell my house? But what I've been able to experience with a couple of them, what we've done is we've gone ahead and listed their home and got it under contract. But we told them, the buyers, whoever was putting offers in, look, part of this, we'll accept your offer, but part of it is we need to be able to stay in the home for up to X amount of time in order to find a new place. And that's worked out really well. We've done it 3 times, and all 3 times my client has been able to find a home. And one of them is waiting until October, and the people are closing on it in a couple of weeks, and they're waiting till October for him to close on a new build. And so, the sellers really do control it. As long as you price your home correctly, you control a lot of the rest of the terms right now. And so while it's been a concern for a lot of people, and I've had a few listings, people that wanted to sell, but then they went out and looked and they said, look, we're going to wait. But I think the big advantage that you're getting is that the fact that we have more under contract than we do active, for both buyers and sellers, you can use that to your advantage. For sellers especially, just saying, look, we're going to sell your home. We're going to price it. I'm telling everybody, we can price at the top end of the market right now because that's what they're going for. But if we're not selling in 2 weeks, we need to come down, because as you can see, everything is selling if it's priced right. And so we'll know quickly we've overpriced it. And so that's kind of something that we've kind of been keeping an eye on. But at the same time, if people are motivated to buy a home right now, it's really important for them to understand too the urgency of getting an offer in the same day and using this data to get a great offer. I have people saying, well, we want to offer 10 grand below asking. I said, you're not going to get the house. And I'm just being very honest with people and to let them know, look, if you want to get your offer accepted, we need to be a strong offer. We need to be full price. We need to have strong earnest money and short time frames. And so the data has been awesome to help people understand what we already know about offering right now.
Jimmy, that's such a great point. I think so frequently, people, there's a natural conflict between the relationship between us and our clients. And that is the fact that we only get paid if they move forward on a transaction. So inherently there's some, nervousness that our advice that we're giving them is maybe not in their best interest. And so utilizing these slides and the data to help you validate the recommendations you're making are so key in helping people feel confident that you're really consulting them in a professional manner. So I appreciate you bringing that up. Yeah. Let's hop into just a couple quick slides. We've got a ton of slides, so I'm going to jump through a couple quickly. But this is just kind of a good sense to see over the last 6 or 7 years how much we've seen the appreciation. Now, this is total units sold in Salt Lake County. Back in 2010 here, you saw about 10,000 units sold. In 2016, 17,000 units sold. So just a huge increase. We haven't surpassed. A lot of people ask me right now, are we seeing a bubble like we did? And I think there's a lot of fundamental things that would support that we're not nearly facing the inflated real estate values that we saw back in 05 and 06. And I think the slides today will justify and validate some of that. But yeah, even today with the hot market that we're experiencing, we're not seeing the number of transactions in Salt Lake County that we saw back in 05 and 06. This is the same data, just kind of a moving trend line. And you can see that it's flattening out just a little bit over the last 6 to 8 months. This is Utah County. Utah County has actually surpassed what it was saw in 05 and 06.
But I wasn't an agent in Utah County. So number there.
Touche. Yeah, Jimmy Rex had not yet impacted the real estate market. So what year was that, Jimmy? Should we put that?
Started in 05, so you can see an upward trend since I knew what I was doing.
Yeah, right. Okay, I like that. Okay, we're going to call that the Jimmy factor. Yeah, so Utah County has, and largely probably because of its availability for land development, I would guess. I'd be curious if you guys have any thoughts on that. But we've seen actually those numbers surpass what they were, 506. Do you think that's primarily just new land development opportunities that don't exist maybe in the Salt Lake Valley?
Yeah, a lot of it is. I mean, I would guess, probably 2 out of every 3 homes I sell, even now, are less than 15 years old in Utah County. And so if you want something new that's affordable, I mean, good luck in Salt Lake County, right? And so a lot of people are willing to make that move, as we've seen past the point of the mountain. First it was Lehigh, and then it kind of has trickled down into the Orem Vineyard area. I think we're seeing it right now up in Salt Lake County a little bit with like Bluffdale, that new stuff off the freeway there too, where if you want something affordable for a younger family or just a lower price range, you're going to have to go south in order to get newer. And so I think those new homes, as they've been building, has definitely caused this spike of total units. So there's just a lot more inventory available in general.
Yeah.
The Salt Lake Tribune, like 2 years ago, had an article where they talked about growth, and that's exactly what they were talking about, was the growth is really the trend. We're supposed to, over the next few decades, double in size as a state, but the majority of that growth is right there in Utah County. Salt Lake is, for the most part, it's getting to that point where it's almost built out. But when you talk about, Saratoga Springs and Eagle Mountain and then further south, that's where all the growth is. And that's what we're seeing. And exactly what Jimmy's saying. I have lots of clients that want to look at, new properties or newer homes, maybe in the last 10 or 15 years, and they're just priced out of the market in a lot of Salt Lake County. So they're choosing, an extra 10 or 15 minutes to their commute to get a newer home and getting that, Saratoga Springs, Eagle Mountain area.
Yeah, nice. Now, let's just kind of remember these two numbers. So Utah County up 6%, Salt Lake up 7%. So those are units sold. Now we're going to jump down into volume. And volume, of course, is what the real estate value is of the real estate that's being sold versus just, a home being a single unit. And you can see Salt Lake actually jumped 14%, which is, a significant increase versus the unit increase. And Utah County up 14% as well. So, Joe, do you mind just kind of explain, what the difference is in volumes and units as we look at these two data sets, and what does that mean relative to what's going on in the market?
Yeah, for sure. So yeah, the units. When we talk about units, that's how many doors were sold, right? How many townhomes, condos, single-family properties. When you start adding up the dollar value of all those combined units, that's where you get to that volume that you're talking about. And I think when we're seeing that 14% increase, that really speaks to, the upward trend that we've been seeing over the last several years. And a lot of that has to do with just this limited inventory. I mean, I feel like a broken record sometimes. It's like I'm really hitting home on how important it is to understand that low inventory is what is really creating that opportunity for the growth. We've got low inventory along with a lot of consumers that want to buy, right? We've got with Silicon Slopes and all of the construction, all of the tech industry that's hit our market, a lot of young educated workforce that want to be in the area. So I think all of that contributes to that volume increase that we're seeing.
Yeah, excellent. Yeah, it's interesting. So a doubling in volume compared to the double of number of units. And Joe, you're exactly right. There's one of two things that have to be happening, or two of two things potentially. The number of units that are selling at a higher price point, and we're seeing a pretty significant appreciation in home values. So let's jump into probably one of my favorite slides. And this is the sales price versus list price ratio. This is Salt Lake County data first. This goes back clear to 2002. So April 2002 to April 2017. So 15.
Wait a minute. When did Jimmy get in?
Yeah, right. The Jimmy factor. It could be his own show, Jimmy factor. All right. So so sales price versus list price. So this was what the unit or the home was last listed for in relationship to what it actually sold for. And if you look at 2006, 2005-ish, the very heat of our market, properties were selling in excess of 99% of asking price. Now, again, this was the last asking price. In today's market, we're just short of that. But I think one of the things that's kind of,
Matt, I think this is my favorite chart to show buyers, that you get these buyers every now and then. They just have a little bit of an unrealistic idea of what they can offer to get a property sold. And this is my favorite chart to show them. It's like, look, homes are selling for 99% of what people are asking for them. If you come in 10% low, like, I want you to understand how rare that is for somebody to actually accept an offer like that. And so it's just an important chart for people to see what it takes to get an offer done the right way and to get it accepted.
So Jimmy, that's a great point. What are some of the scripts that you use, or what's some of that dialogue that you have with them relative to that? Because there is a risk, right? There's a risk if they make an offer at 10% below. And
yeah, well, I think one of the things that I always tell myself is that don't try to be a hero, get them the house at a good price. And so, like, what I mean by trying to be a hero, I get agents that send these offers in for, 10 or 15% lower than the asking price, and they never, you don't even consider them. And what happens in the meantime is they get a good offer, or that, they get an offer that they're going to accept, and you end up costing your client the house they wanted because you're trying to save them money, but they were never realistically going to get anywhere near that number. And so what I always say is, look, if they're getting the house at a good price, if it's a good price and it's priced right, and usually I'll talk to the agent, they'll give you a pretty good idea of, like, hey, no, this is the kind of action we're getting on the home. Or if you know the market well enough, you just know the house is going to sell at that price. Especially right now, it's never been easier. When you see a house listed, you know if it's going to sell at that price or not. And usually you're like, yep, that thing's going to sell within a week. And they always do. And so this is just an important way to show the client, like, look, if we have a bargaining power here at all, it's because they've way overpriced their home. And so you're only getting it at market value anyways. We're probably just not even going to go see any homes that are that over marketed or that overpriced. And so this kind of helps me to be able to tell people, look, here's what we need to do to get the house. I've already talked to the agent. I've ran the comps. This is a good number. And then we come in with a strong offer. And that's, again, get them in the house while rates are down, while the prices haven't gone up more than they already are. And you're doing a lot better job for your client. You're actually doing them a huge service, as opposed to trying to be a hero and save them another $5 or $10 grand. But really, in the end, you cost them the house they really wanted, or you end up costing them, in the long run, months of their time where they get frustrated with you and think you don't know what you're doing.
Right. Yeah. One of my favorite scripts that I used frequently was, what's your second favorite house? Because the strategy of going in low, especially in this kind of a market, you're going to end up losing the opportunity, right? So, let's just get focused on your second favorite house. And inevitably people are like, I don't want the second favorite house. Like, this is my favorite house for a reason. And so I want this house. Well, when we write an offer 10% below market, or what is really asked for, or market value, they just use that as leverage to generate more activity and generate more offers from other people that have seen the home in the last handful of days. And now we find ourselves in a bidding war. So Jimmy, you're spot on. Like, how do we help our clients get what they want? And I think it's being able to, articulate that. So
Matt, can I interject on that?
Yeah, please.
One thing that, my brother Jeff works with me on my team, and he's been an appraiser for 15 years. And so he's got a lot of really good and valuable experience. And one of the things that I've really learned from him over time is, hey, there's a reason that we have appraisals done, right? To make sure that we're not overpaying for properties. So one of the things when we meet with our clients for the first time, and we show them slides like this and just really help educate them to help them understand that, it's a waste of time to try to come in at 10% off of value on a property. The better scenario is if you really like this house, then you come in strong right in the beginning, and just know that if there's an appraisal issue, then we can go back and renegotiate things with the seller. And I don't know if you guys are seeing this or feeling this, but I mean, we're bumping into appraisal issues all over the place, both on my listings as well as on, buyers. I mean, it's just a product of the market that we're in, and that upward pressure that we're seeing on prices, that appraisals are becoming a little bit of an issue. And so it's important that buyers understand that appraiser, he has a job to do and to make sure that, there is value in that property. And if not, then we can go back and renegotiate. So we've got that safety measure.
Yeah. Appraisals are so challenging because they are based on historical data, and it's not necessarily, what's really going on in today's market.
And as a buyer, that's important to know that,
Yeah.
you know, we have leverage then again, right? Because we can go back to the seller at that point and say, hey, we love the house, we want to buy it, but the reality is it's not worth that much, and here's the appraisal, and this is what we need to do. So
yeah. So, gentlemen, how do you use this slide now with a seller potentially? Because I think it you know, really sets up some great conversations relative to seller. Because ultimately, if you've been in the business, you know, any length of time, sellers will say, and they all want the top dollar possible, and we want them to get the top dollar possible, of course. But a lot of times they will overprice the home intentionally with the excuse that they need room to negotiate, right? So, you know, how would you use this slide in your dialogue with them relative to the dangers of overpricing, even in this market? Joe, why don't we start with you?
So yeah, and I think that's a really good point, and something that sellers have to be very, very cognizant about. I like what Jimmy said. I agree with it. That if we put the house on the market at the wrong price after a week or two, if we're not getting the activity, we need to be really aggressive about getting that price down into that price point. I think the longer that we go at that higher mark, I mean, honestly, after 2 weeks, even, you know, sometimes buyers start to look at a property and go, what's wrong with it? Why is it on the market? I mean, it sounds funny, but if it's 30 days on the market, something's wrong. And so it's either overpriced or there's something functionally wrong with the house, and buyers will start to just discredit it and avoid it a little bit. So as a seller, you got to be really careful not to just throw up some crazy number and expect that the market's going to, you know, be there for it. If you're not getting that activity, you know, I like to use the kind of the scenario of, hey, if we're getting a ton of activity, but we're not getting offers, then we're probably 3 to 5% off, and we need to make that adjustment quickly. If it's, you know, and I just go through that scenario. If we're getting some activity, but no offers, this is what it means. And if we're not getting activity, then we're way off the mark, and we've got to readjust.
Yeah, there's actually really accurate data in real estate because there's so many homes that get sold, and I mean, it's just a fact. If you're not getting at least, depending upon how many days on market is average in your area, but like right now, if you're not getting at least 2 to 3 showings, you're overpriced. Or if you're getting 7 or 8 showings but no offers, you either have something you need to fix up in the house, or you're probably overpriced. And so I just like to use the data. I keep the sale completely non-emotional. There's so much data. It's very easy to tell what's going on when you pay attention to it.
Awesome. Yeah, thanks, guys. It's interesting always to me when you look at this over time, even back in 08 and 09, you know, when the market was kind of a mess, like it was pretty ugly, nearly blood in the streets, right? And not so much in Utah as some other markets like Phoenix and so forth, but even at that point, look how little the variance is between 99% and 96.5%.
Well,
regardless
Matt, I think,
of the market, pricing matters, right?
yeah, I think it's important if you're showing this to a seller, though, you make sure they understand this is sales price to list price, not to original list price, because you have to get the price to where it needs to be before that is going to actually happen.
Yeah, that's right. And the risk of overpricing in many cases in a market like this is that you're now in the market 30, 40 days, and people start to ask, like, what's wrong with this property? Why has it been on the market so long? And in many cases, it can start harming you in a negotiating scenario.
Yeah, there's some good charts that show that in this market, I think it's like 46 to 47% of the homes are going under contract in the first 10 days, 14 days. And so you can show people, look, if you want to miss half the potential buyers, overprice it for 2 weeks.
Yeah, great point. So Utah County, almost identical to Salt Lake County. This is kind of one of my favorite slides. We'll just touch on this real quickly. Salt Lake County and Utah County are near identical here. But the blue is just the past 12 months of active listings, or excuse me, listings taken during that 12-month period. The red is total sold during that same time period. And it's just a real great indicator of what we can see in the market. So if you look down here, this is June 2006, when the market was super hot. And these two graphs really come close together at this point. And real estate prices actually continued to go up for nearly 18 months after these two started to diverge. And you can see right now we're just in this great steady pace. I think this is a slide that really helps me feel confident that we're not in an overinflated market again. And of course, you can see something very similar to that in Utah County. The one thing being different is just the number of listings that have come on in the last 6 to 7 months is outpacing Salt Lake County. So let's jump down here to percentage of units that listed, which sold in the past 12 months. Now, This is a pretty interesting slide. I think in particular, in making an argument on why work with an agent and pricing. But basically, again, this goes from 2002 to present, April 2017. And this just says of all the properties that were listed during the past 12 months, how many of them actually sold? So now take into account, this is homes that may have expired, people that changed their mind, people that couldn't get the price that they wanted, and for whatever reason, they didn't sell their house. And that's kind of the delta here that represents the difference between the graph and the blank space. But at the height of our market in 2006, 75% of everything being listed was selling. Today, nearly 80% of everything that's being listed is sold. Now, it's interesting to think that that's still 20%, over 20% of the properties getting listed aren't being sold. How are you guys utilizing this data in dialogue with a seller? Let's go, Jimmy. Sorry.
Yeah, no worries. Yeah, I think it's important. I mean, even if you look at the number of people that start as a for sale by owner that end up listing their home with an agent, it's over 90%. And so I just think, if you want to move, if you really need to sell your house, 80% of the time with any agent, you're going to get your home sold. And I think this does two things. One, it shows the power of using an agent in general, but then I think it also shows the importance of using an agent that's going to get your house sold 100% of the time instead of just 80% of the time. And who you work with does really matter.
Yeah, love it. Joe?
Yeah, very similar. You got to know your statistics, right? So knowing what the percentage of the market is that's selling versus, what we do with our percentages. And we use that every single listing appointment. We sit down and show, here's what the market's doing and here's what we're doing. And this is why hiring the right agent that's going to be able to get your house sold every single time.
Yeah, it makes a difference. So, there's so many people that do have license out there and maybe don't treat it as professionally as others. And those that are really engaged in the market and professional at what they do, it's worth it. They make a difference. And I think this demonstrates the importance of finding someone, even in this kind of a market, to work with a great professional. Utah County, very similar. Let's drop down to this graph. This is Salt Lake County, quantity sold versus volume sold. So this is the same data that we saw at the very top, just demonstrated in a little bit different way. And what we're looking for here is kind of an inflation of the market. So year over year, market being growing, in excess of 10%. So here's the 0% line. And, what we're looking for is multiple years that are dramatically high or dramatically low. Because ultimately what generally follows that is, the price. The price will either continue to race up after a period of time or dramatically drop after a period of excessive times where we're seeing double digit either growth in volume or growth in units sold. And here's where I take a lot of just solace in the fact that I think our market is really stable right now. So if you look over the last 5 or so years, yeah, we saw a good little jump here as we came out of what many people refer to as the Great Recession. People jumped back into the market. But over the last handful of years, it's really kind of normalized near that 5 to 12% range, which most economists, will say is a healthy growth rate if you're in that 4 to 8. And we seem to be trending back in that space, which I think gives me just a lot of confidence.
Well, I think a lot of people, Matt, sorry to cut you off there. Yeah. I think a lot of people have seen that basically we've been in a good market, an appreciating market since 2009. But I love this chart because it shows it's not like we've been on this 20% raise for 9 straight years. It's been a steady, healthy growth. The first part of that growth was just getting back to where we should have been anyway after the huge drop. And then since then, it's been a very steady market. So when people keep saying like the market has to go down, well, no, it doesn't, because all the factors, as we can see, show more of a healthy market than an unstable market, as you can see if you look back at 05, 06, 07.
That's right. Yeah, not overinflated. And keep in mind, for those that are watching, this is not the value of real estate, but just the number of units sold and the volume of units sold. We'll look at value and how homes have appreciated here in just a minute. So average days on market, Salt Lake County. You can see this goes back to 2002, April 2002 to present, so 15 years of data. In our super hot market back in 06, we had 39 days on the market on average in Salt Lake County. Today we're at like 24. Joe, you feeling that?
Yeah, totally. And what I love about, that graph and being able to show that to people is, if you're a seller, you need to understand, just like we were talking about before, if I've priced my home too high, and just like I was saying, I mean, if you're 30 days on the market, excuse me, and you don't have offers and you haven't got that thing under contract, you're at risk that people are really going to start to discount your property. And in the end, you're going to end up making less money because people are going to start to discount. You're going to have to drop your price, and then you're going to get, lower offers, rather than if you just price it right in the beginning, then in that first 20 or 30 days, you should have that thing under contract. And if I'm a buyer and if I'm representing buyers, I need them to understand how hot of a market it is and not to sit and wait and think about making an offer on a house. When you see something and you like it, you need to jump on that house right then and there with a strong offer. Come in with your best foot forward, because otherwise the competition's pretty stiff.
And being pre-approved and getting all your financing lined up, ready to go. Utah County, so interesting. Salt Lake County, 20 through 24. Utah County, maybe 25, 26. So very similar. So Jimmy, you're experiencing the same thing?
Yeah, I just tell my clients when I first meet with them, I say, look, if we find a house you're interested in, are you ready to buy it today? Because if we wait till tomorrow, there's a good chance it's gone. And if they say, no, we're not ready, I literally don't want to work with them yet, because we won't get the house. You're just, it's like, look, trying to find a date, you only look at married women. If you're not ready to pull the trigger, what's the point?
Well spoken, as the single man on the call. All right, good job. All right, Salt Lake County. So year-over-year percent change in residential. This is values. So you can see just exactly, Jimmy, as you were talking about, the last handful of years, we've really seen appreciation in price. There's a couple slides that show that a little bit better here, Utah counties. So let's look at Salt Lake County. Salt Lake County, this is the median sell price. And of course, the median is not the average, but the one exactly in the middle of all the transactions that occurred. And it's probably in most cases what we feel is the best way to measure home appreciation. And you can see at the top of our market back in 2007, we were at 274,000. Today, just north of 300,000 in Salt Lake County. And you can see this nice steady appreciation over the last handful of years, 13%, 4%, 5%, 7%. And then in Utah County, very similar. Again, average home price, and just as you guys indicated, it's a little less expensive for property, for real estate, for a home in Utah County. Topped out at 262 in 2007, and we're currently at 284, with just really nice steady appreciation over the last 4 or so years. You guys, what are you predicting for appreciation this year? What do you think we're going to experience?
One thing I wanted to mention, Matt, that I'm helping people understand right now is if you look at all the economic factors as we're doing here, there's a lot better chance that we're going to see 3 to 5 to 8% appreciation again this year, next year, the year after, than we are going to see anything stabilized to a 0% or lower. And so what I'm telling people is, look, if you're trying to predict the fall in the market, even when it was its worst fall, if you add up the negative percentage, you're going to lose all this appreciation over the next 3 or 4 years before anything goes negative. And let's say it appreciates 10, 15 more percent and then goes down 10 or 15%. You're going to be still in a good position because you needed to be in a home, or you're making money off of your cash flows or whatever it is, if it's an investment property. I mean, all the factors, and I talked to, Tom Ferry's a personal mentor of mine, and he's best friends with the guys over at Zillow. They have more information than anybody. And he thinks we got 4 or 5 more years of this kind of a good appreciating market ahead of us. And so I'm just telling people, like, look, if you're worried about the market going down, you should be a lot more worried about it going up at so much that it prices you out by the time you end up getting in anyway. You got to live somewhere. So you might as well get in the house you want to be in.
Yeah, great advice. Joe?
Yeah, and then you factor in the interest rate, right, that you're going to be paying. And if you're sitting waiting for that market fall and it keeps steadily rising, and all the while those interest rates start to climb, you just missed out on that. And if you're going to plan on staying in that house even 10 to 15 years, I mean, you're really going to miss out on an opportunity to have an amazing interest rate that's going to save you a lot of money in interest. That money that you're trying to save on the purchase price, you're going to spend in the interest if those rates go up. And then you factor in that we've got this incredible economy locally here. I mean, regardless of what the national economy does, our local economy and the forecast for it is so strong with so much job creation that it would be really hard to try to predict the fall right now.
Awesome. So median sell price, same data, just kind of in a moving trend line. You can see just excellent growth, and not nearly the pace of growth that we saw when the bubble occurred. It's always nice to kind of just look at a 3 or 4% trend line over time. And when you draw that line out over time, we're really right in that line where it shouldn't be overvalued based on 3 or 4% trend line. Utah County, the same. So let's just look at a couple last slides and then we'll wrap up for today. Absorption rate. And absorption rate is something that a lot of times people hear on the news. They're not quite sure what it means. And, it's something that is important for us to help understand the trajectory and the speed of the market. Joe, do you want to talk a little bit about absorption rate? And how do we define that?
Absolutely. Basically, what we mean by that is if nobody else put a home up for sale tomorrow and all the homes had to sell before we listed any other properties, how many months would it take to sell the current inventory that we have on the market? And that's what you're seeing. Just at a tremendous number. It's crazy to see it. But, we had back at, 2011, and it's at 8 months supply. And now we're looking at about just over a month.
Yeah. And historically economists differentiate a buyer's market and seller's market based on the absorption rate. So Jimmy, how do they differentiate the buyer market between seller market?
That's right. And I've been told it's 4 to 5% is like a steady market. And so anything above that on month supply of homes, you're going to have a much more of a buyer's market like you saw in 2011, 2010. Anything below that is going to be much more of a seller's market, which right now is probably, in my 14 years of doing this, definitely the best seller's market we've been in. And that is a direct correlation to the absorption rate and the low amount of supply homes on the market.
Yeah, exactly. So the idea, of course, when we say seller's market, it just means that the seller has kind of the upper hand in the negotiating platform. They kind of have the power to some extent. And the buyer, when the market is, just the opposite of what we're experiencing now, where there's a lot of inventory, generally the buyer will have a little more negotiating power. So let's look at Utah County. So Salt County, just over a month, which is just unheard of, just unreal. And then we got Utah County, which is just right around, 2 months. So still just unreal. Historic lows. Okay, so this is kind of one of the big key pieces. And this is our last slide for today. But this is the interest rate piece. And so this is a 30-year fixed rate. This is data straight from Freddie Mac. And you can see this is historical data for the last 15 years. And it's interesting. We've been in kind of an unprecedented period of time for almost 15 years where it's below 7%, which is, when they look at the last 45 years, 7 to 8% has kind of been the average for the past 45 years. So we're on this extended period of time with a very low interest rate, and really last 4 or 5 years, near or below 4%. How should that, and we've talked about it, touched a little bit about it, but why don't we just kind of wrap up specifically on some of the scripts that you guys are using and conversations that you're having with your clients relative to, how does interest rates impact decisions currently?
Yeah, I mean, I just pull out the mortgage app and literally show them. I plug it into the app, and you look at a payment. If the difference between 4% or 4.5% versus 6 3/4 or something on a payment, and when people see how drastic it is, they see the importance of buying a home now as opposed to waiting till they go back up. I bought my first house in 2003, so my first house I ever bought was 6.75%, just as the chart shows. And so you can see, like, for me, I can't emphasize enough how good these rates are and how much more urgency there is to take advantage of them. We don't know how much longer they stay down. I mean, I remember back in 2012, people thought they couldn't stay down, and they have. But that being said, if there's certainty right now to knowing you can lock in a low rate and the difference of a couple $100 a month on a payment of an average sized home. So it's significant.
Yeah. Joe?
So, yeah. And, it's funny. The federal government doesn't want to see rates down this low, right? I mean, they eventually would like to see them more in that 6% range or so. I remember when the first time I saw a rate go below 5%, I about fell out of my chair. I just couldn't believe it. And I think we've had such an extended period of time over the last 4 years or so with these crazy rates that we start to just kind of get fat and happy and not really understand how good we have it. And it's exactly right to start showing them the difference in buying power. For every 1% that rate goes up, you're losing 10% of your buying power on that house. And then you also, above and beyond that, you have to factor in that interest that you're going to pay over the life of that loan for however long you have it. And that adds up dramatically. So it has so much to do. And I think sometimes we get a little bit short-sighted as buyers and we want to get the best deal possible on the price of the home. And that interest rate has a lot more to do with how we're going to end up, in the long run on that house. So that interest rate is super key.
Yeah. Thank you. I love that thumbnail kind of, comparison too, because it's such a powerful way to help us remember that just a 1% increase in interest rates, really we lose 10% buying power. And when you start to really understand how that impacts you, and you're looking, let's say, at a $400,000 home, and all of a sudden you realize you can only afford a $360,000 home, like the comparison of that, right? All of a sudden that's really impactful. And the reality is, the real estate values probably won't jump 10% in the next couple of days, but it's possible for interest rates to literally jump 1% overnight. And it can have that kind of impact on your buying power. You guys, thank you so much for being on the call today. I just can't tell you enough how much I value your opinion. We've got a number of people that have asked questions and commented. A lot of people saying thank you, which I will echo that. A number of people have asked where they can get the slides. If you're a Keller Williams agent, of course, you can get the slides from your office. Just let your office leadership know that you'd like to copy the slides. We produce these every quarter for each of our offices by market and by county, so you can get a copy of each of these. If you're not a real estate agent with us and are interested in getting some information, we will be sharing the video for this broadcast on our YouTube channel. We'll post in the next handful of days a link here on our Facebook page, so be sure to follow us here on this page by liking our Facebook page, of course, facebook.com/KW Utah, and we will link back to that so that you can re-listen to this if you'd like. Gentlemen, before I let you go, any kind of parting comments relative to what you see happening with the market in the coming months? Joe, we'll start with you and end up with Jimmy.
Yeah, sure. No, I just want to echo kind of, that what we've been talking about here, which is it's a great market to be in, right? And I think sometimes people have a lot of fear and anxiety about, oh gosh, I'm not going to be able to get a home, or it's too competitive. And the reality is, it's just preparing our clients properly to understand how to win in this market, just putting that game plan together and having that strategy. I just want to thank you, Matt. You do such an awesome job with all these materials, and these graphs that you put together are phenomenal, and they do such a great job of helping us be able to really relay that information to our clients.
I appreciate that. Thank you. All right, Jimmy, any last words?
Yeah, I would just say, I think information is power. I think most people, the experience they get with a real estate agent that pays attention to this stuff and knows what's going on, it's a large difference between the experience you're going to have, whether or not you actually get the home you want and get it at the price you want, or get your home sold in a timely manner. And I think people in general, more than anything else, will pick an agent based on two things: whether they trust the agent as a person, just that they have their best interest in mind, and that they trust they know what they're doing. And I think that's where this information becomes super valuable, and being able to express it in a way. I think we've shared some ideas that hopefully will help other agents be able to relate to their clients and be able to share the information in a way that they'll understand it. So it's pretty good.
Awesome. You guys are rock stars. Thank you so much. Hey, if you liked the content today, you liked the discussion, please take a minute and give us a thumbs up. You can find a reproduction and a video of this on our Facebook page and our YouTube channel that we will really post here in the next handful of days. Again, we will answer any comments too. So if you have comments or thoughts, ways that we can make this better, we would appreciate your thoughts and comments in the feed below. And just a reminder, we have a couple of really great events coming up here in the next handful of weeks. May 11th, again, is our Red Day, Keller Williams Red Day. Just going to be a fun event where we get out and get back to our community and the people that we get to hang out with. So we're super excited about that. And then May 18th, I really have a cool broadcast set up with two awesome guests, Jeremy Larkin and Karen Anderson. who will be discussing with me the St. George Parade of Homes and all the new design ideas that they're seeing in Southern Utah. So please, if you want to just be reminded about when we're having those events, please take a minute and be sure to like our Facebook page and follow me on Facebook. You can follow me at facebook.com/Matt Green, Utah. All right, guys, peace, love, and productivity. Have a great day. Thanks.
Thanks, Matt.